Three things are happening at the same time right now that have never lined up like this before in the entire history of XRP. Not once. XRP Tokyo 2026 is happening today. It's Asia's largest conference dedicated exclusively to XRP. There are 3,000 attendees, more than 20 speakers, and Ripple's senior leadership is on stage alongside SBI, Rakuten, A16Z Crypto, and Securitize Japan, all inside a 400-year-old Japanese garden in Tokyo. The Senate returned from Easter recess today, April 13th, which means the Clarity Act markup window is officially open. The clock that Galaxy Digital said would determine whether this bill lives or dies in 2026 started ticking this morning. And 48 hours from right now, April 9th's full tariff reciprocation takes effect. This is the macro event that just caused Standard Chartered to cut their 2026 XRP target from 550 down to 280, pushed the Fear and Greed Index to sit at 12 for 49 consecutive days, and left over 56% of XRP's circulating supply underwater. Three timelines. One 48-hour window. And the outcome of all three will determine whether XRP enters Q2 2026 with more momentum than it has ever had before, or slides into a period with no catalyst that pushes every major institution back to the sidelines until 2027. Before I continue, this is not financial advice. I am sharing publicly available information for educational purposes only. Always do your own research and consult a qualified professional. Let me start with Tokyo because it is happening right now, and most of the XRP community does not fully understand what makes today's conference different from every other Ripple event of the last 3 years. XRP Tokyo 2026 is not a Ripple marketing event. It is not a developer conference. It is not a community meetup dressed up as something bigger. It is Asia's largest conference dedicated exclusively to XRP and the XRP Ledger, hosted at Hamarikyu, a 400-year-old Japanese garden. And the speaker lineup makes very clear why the institutional weight of this event is different from anything before it. On stage today are Christina Chan, Tatsuya Kurogi, and Marcus Infanger from Ripple's senior leadership, Jay Akin, head of engineering at RippleX, Takuya Sugiyama, vice president of SBI Ripple Asia, Smopart from A16Z Crypto, Tatsuya Yamada from Rakuten Wallet, and representatives from Securitize Japan, Evernorth, and the University of Tokyo. SBI alone justifies the importance of this event. SBI Holdings is Ripple's largest external shareholder. Their relationship with Ripple goes back to 2016 through SBI Ripple Asia, which has built cross-border payment solutions across Japan, South Korea, India, and the Philippines. 6 weeks ago in February 2026, SBI launched a 10 billion yen blockchain bond, the equivalent of $64 million US, that rewards investors directly with XRP. That is the first time a major Japanese financial institution has issued a bond where XRP is the yield mechanism, not RLUSD, not regular currency. XRP, and today SBI's vice president is on stage at the largest XRP-specific institutional conference ever held in Asia. Japan is not a small or unimportant crypto market. It is one of the most regulated and institutionally developed crypto ecosystems in the entire world. XRP is on the JVCA Green List, which is Japan's financial services agency recognized framework for institutional-grade crypto assets. It is handled by 20 member exchanges, making it the third most widely adopted asset in Japan's regulated ecosystem, behind only Bitcoin and Ethereum. Japan's tokenized real-world asset market is already managing $2.8 billion across institutional platforms, with projections pointing towards $6 to $7 billion by the end of the year. XRP Tokyo is where that infrastructure conversation happens at scale. And A16Z Crypto being in the room is not just for show. When Andreessen Horowitz's crypto arm shows up to an XRP-specific institutional conference, they are there to evaluate infrastructure. That's what they do. Now let me tell you what the community is watching for from today's event specifically. The agenda centers on three areas: institutional adoption, real-world asset tokenization on the XRPL, and the future of RLUSD at SBI VC Trade. The RLUSD panel at SBI is the most significant item on that agenda because it reveals exactly how close Japan is to becoming the first major regulated market where Ripple's stablecoin runs through a licensed exchange at institutional scale. SBI VC Trade holds a digital asset exchange license in Japan. Plans are already in place to introduce RLUSD through that platform. If today's panel confirms a timeline for that launch, the XRP community will have its first confirmed date for RLUSD entering the Japanese market through a licensed exchange with SBI's entire client base behind it. And here is the bigger context that makes today's Tokyo event more important than any of Ripple's previous conferences. Japan's yen has been weakening. Cross-border payment demand between Japan and its trading partners, particularly South Korea, India, and the Philippines, where SBI Ripple Asia operates, is at elevated levels. When currencies are volatile and cross-border settlement costs go up, the case for a neutral bridge asset that settles in 3 to 5 seconds for fractions of a cent becomes more commercially urgent, not less. The tariff environment that everyone is afraid of in the context of crypto prices is actually strengthening the real-world argument for exactly what XRP does. Tariffs disrupt traditional trade finance. Trade finance disruption creates demand for faster and cheaper settlement. The XRP ledger processes 2.7 million transactions per day. It is the infrastructure that benefits when the traditional financial system gets more expensive and slower. Now let me turn to the Clarity Act, because the Senate returned this morning, and what happens in the next 2 weeks in Washington will determine XRP's entire second half of 2026. The Digital Asset Market Clarity Act has been through a really tough legislative journey. It passed the House in July 2025 with a 294 to 134 vote, one of the strongest bipartisan margins for any crypto legislation in U.S. history. Then it hit the Senate and stalled. A stablecoin yield fight between the banking lobby and crypto firms killed the first markup attempt in January 2026. JP Morgan, Bank of America, and Wells Fargo spent 3 months lobbying against a single provision, the clause that would have allowed crypto platforms to pay interest on stablecoin holdings. Those banks saw yield-bearing stablecoins as a serious threat to their deposit base. If you can earn interest holding USDC on Coinbase, you have less reason to keep money in a regular checking account. The banks held the entire bill hostage for a full quarter over this one clause. Then on March 20th, Senators Tillis and Haggerty reached a deal. The revised language prohibits passive yield on stablecoin balances. The banks got what they wanted. Their reason to block the bill is gone. And today, April 13th, the first day the Senate is back in full session, the Banking Committee markup window is officially open. Here is what the markup window actually means, and why the next 2 weeks are the most important weeks XRP has faced this entire year. The Senate Banking Committee has 2 working weeks in April to hold a markup, the weeks of April 13th and April 20th. After that, the Senate goes into recess again. There are no other in-session dates in April. If Banking Committee Chairman Tim Scott does not schedule a markup in one of those 2 windows, the bill does not get a markup in April. Galaxy Digital's Alex Thorne said it plainly and on the record. If the bill does not clear committee by the end of April, it is likely dead for 2026 because midterm election politics will consume the entire Senate calendar from May onward. Senator Moreno has been equally direct. If the bill does not reach the Senate floor by May, it will not move again before the 2026 midterms, which pushes everything into 2027. The outstanding issues going into the markup are real and deserve honest discussion. The stablecoin yield text has been resolved, but the DeFi provisions, token classification details, and tokenization treatment are still under review. Senate Majority Leader Lummis has described the bill as close to agreement and confirmed the markup is back on the calendar. That is the most positive signal possible from a senator who controls the scheduling. But close to agreement and fully agreed are 2 different things. The risk is that one of the remaining open issues produces a new objection from a block of senators, delays the markup past April, and triggers the Galaxy Digital scenario, where the bill effectively dies for 2026. If the markup happens and the bill advances, here's what the numbers look like. Standard Chartered's Jeffrey Kendrick projects $4 to $8 billion in new XRP ETF inflows as a direct result of permanent statutory commodity classification. 7-spot XRP ETFs currently hold $144 billion in cumulative assets. Those 7 ETFs saw weekly inflows collapse from $43 million per week at launch to under $2 million per week in March, the first month of net outflows since they launched in November 2025. $4 to $8 billion in new inflows entering a market where 11.4 billion XRP has already left Binance, and the order book is thin means a price response that is much bigger than what the same inflows would produce in a more liquid market. Standard Chartered's base case with passage and moderate inflows is $280. Their bull case with passage and accelerating inflows is $8. Their 2030 target is $28, and they have not moved it through the entire 2026 correction. Now let me talk about April 9th and what the tariff deadline means for XRP specifically, because this is the piece that has the community the most scared right now. And I think the fear is both justified and missing a really critical insight. On April 9th, full tariff reciprocation takes effect under Trump's Liberation Day framework. The Fear and Greed Index has been sitting at 12 for 49 consecutive days, a streak not seen since mid-2022. Bitcoin is at $68,000. Standard Chartered just cut their 2026 XRP target, specifically citing tariff pressure on risk assets as the reason. XRP itself has already felt the tariff impact. When Trump announced tariffs in April 2025, Bitcoin fell from $88,000 to $74,000 in 5 days. Ethereum and XRP both fell nearly 28% in that same period. The tariff shock to crypto is not theoretical. It has a documented history, and April 9th is when the next chapter of that history executes. The fear in the XRP community right now is that tariff-driven macro pressure kills the momentum from Tokyo and delays the Clarity Act markup by consuming Senate bandwidth with economic emergency debates. That fear has merit. When a president implements sweeping tariffs on the nation's trading partners, senators spend their first days back in session fielding calls about inflation, supply chains, and economic instability rather than scheduling crypto market structure markups. That is a real risk to the legislative timeline. But here's the critical insight that the fear narrative is completely missing. The tariff environment is not uniformly bad for XRP. It is bad for XRP's price in the short term as risk-off sentiment drives capital out of volatile assets. But it is structurally positive for XRP's actual use case in the medium term for a reason that almost nobody is covering. When tariffs disrupt global trade, cross-border payment costs rise. Traditional banking rails, the fiat system that charges banks 1 to 3% and takes 3 to 5 business days to settle international transactions, get more expensive and more uncertain as relationships shift in response to new trade barriers. That is the exact environment where Ripple's on-demand liquidity becomes the most commercially attractive it has ever been. 3 to 5 second settlement, fractions of a cent. No pre-funded accounts sitting idle, no correspondent banking relationships that need to be renegotiated every time a tariff regime shifts. Garlinghouse has said it explicitly. Ripple's treasury platform now processes $13 trillion in annual payment volume. If even 5% of that volume routes through ODL corridors with XRP as the bridge currency, that's $650 billion per year flowing through XRP demand. The tariff environment does not hurt that math. It accelerates the commercial case for why the product needs to exist. Short-term price pressure from risk-off sentiment is real. Medium-term demand expansion from a more expensive and more fragmented global payment system is equally real. And there is another tariff angle that the XRP community almost never discusses. One of the biggest drivers of cross-border payment volume in the Asia-Pacific region, particularly between Japan, South Korea, India, and the Philippines, where SBI Ripple Asia operates, is business-to-business trade settlement. When tariffs raise the cost of goods between countries, the companies buying and selling those goods still need to settle their transactions. They still need to move money. The question is what payment rail they use. Ripple's ODL is available in all 4 of those markets through SBI Ripple Asia's corridors. The companies that adopt it today when trade finance is getting more expensive and uncertain are the companies that build XRP into their operational infrastructure at a scale that persists even after the tariff environment eventually stabilizes. Now let me give you the complete and honest scenario analysis for what the next 48 hours will determine. The bull scenario requires 2 things. The Tokyo conference produces at least one concrete institutional announcement, whether that's an SBI RLUSD launch timeline, a new Japanese bank ODL corridor, a new A16Z-backed XRPL project, and the Senate Banking Committee announces a markup date in the week of April 13th or April 20th. Either one of those events alone moves XRP. Both together would represent the most significant simultaneous catalyst stack this asset has seen since the spot ETFs launched in November 2025. In the bull scenario, XRP's near-term target is 160 to 180, which is the range FX Empire projects if the markup is announced. Standard Chartered's base case with full passage is $280. The base scenario is that Tokyo produces institutional momentum in Japan without any single headline-generating announcement. The kind of conference where the importance is felt in the attendee list and the conversations happening behind closed doors, rather than in any specific public disclosure. And the Clarity Act markup is announced, but scheduled for late April rather than this week. In that scenario, XRP consolidates in the 1.30 to 1.45 range, while the market waits for the markup date to arrive. The tariff pressure from April 9th provides downside volatility without a sustained break of the 1.27 support level. The bear scenario requires the tariff impact on April 9th to be severe enough to drag Bitcoin below $65,000, the Clarity Act markup to be delayed past April because Senate floor time gets consumed by tariff-related economic emergency debates, and the Tokyo conference to produce no headline-generating institutional announcement. In that scenario, the 1.27 to 1.28 cost basis cluster that currently holds 19.6 million XRP becomes the battleground. If that breaks on a weekly close, the next support is 1.20 and then 1.04. The 2027 narrative that XRP has to wait another year for its legislative catalyst becomes the dominant story. Here is what to watch specifically in the next 48 hours. From Tokyo, watch for any SBI announcement around RLUSD at SBI VC Trade. If a launch timeline is confirmed, that is the most commercially concrete announcement this conference can produce. Watch for any new partnership announcements involving Japanese banks and XRPL ODL corridors. Watch for A16Z's commentary on XRPL investment. When Andreessen Horowitz starts talking about an ecosystem publicly, capital follows. Watch for Garlinghouse's positioning on the Clarity Act from the Tokyo stage. Anything he says about the legislative timeline updates the market's probability estimate for the markup from Washington. From Washington, watch for a markup date announcement from Senate Banking Committee Chairman Tim Scott this week. A confirmed date, even a date in late April, moves XRP before the vote actually happens. The market prices in legislative probability shifts, not just confirmed outcomes. A scheduling announcement is the first signal. Watch for any news about outstanding Clarity Act text disputes being resolved during the week of April 13th, particularly the DeFi provisions and token classification language still under review. From the macro picture, watch Bitcoin's price response to the April 9th tariff implementation. Bitcoin above $65,000 through April 9th means the macro floor holds, and XRP's technical support at 1.27 to 1.28 has a chance of holding with it. Bitcoin breaking below $65,000 on April 9th tariff news is the signal that the bear scenario is on the table. And watch the XRP ETF weekly inflow data. It updates every week. The week that inflows reverse from the March net outflow back into positive territory is the week institutional money starts moving in response to legislative signals. That reversal is what the bulk of 2026's price appreciation will be built on. I have been covering XRP for a long time. I have watched every catalyst come and go. The OCC bank rule, the MasterCard partnership, the commodity classification. Every single one of them arrived and was followed by a price drop. This community is exhausted, and that exhaustion is completely justified. But I want to say something honest about why today is different from every previous Catalyst day in 2026. Every previous Catalyst in 2026 was a company event, a Ripple announcement, a regulatory classification. Those create sentiment. What is happening right now on the same day is different in its very nature. Tokyo is an institutional convergence, not a Ripple press release. The Clarity Act is a legislative event, not a corporate one. And April 9th is a macro event that paradoxically strengthens XRP's commercial use case at the exact moment it creates short-term price pressure. These three things are not individually unique. Three of them arriving on the same 48-hour clock is whether this window closes with XRP having a legislative mandate and institutional momentum behind it, or closes with a bill stalled again and a price chart pointing toward 1.04 will be clear before this week is over. Watch the signals. Watch Washington. Watch Tokyo. Watch Bitcoin on April 9th. This is the window. Macro storms pass. Infrastructure lasts. See you in the next one. Smash that like button. Drop a comment with your honest prediction. Does the Clarity Act get a markup date announced this week, or does the tariff noise delay it past April? Both sides have real evidence, and I want the full debate in the comments. Subscribe and hit the bell, because the moment any news drops from Tokyo or from the Senate Banking Committee scheduling announcement, I will be covering it in real time. Share this with someone in the XRP community who is watching the price and feeling the fear right now. Show them the full picture of what the next 48 hours actually contains. I will see you in the next one.